Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's take a look again at the euro currency. As you can see that the pullback that we have expected has happened to the upside from the significant support area, but as we said yesterday, to be confident with the fact that market is now showing the continuation of the upward trend on the higher time frames, we need some further action to the upside. We need to see that this pullback is not just the recovery from oversold condition and not just a respect of the strong support area. But the first test market has failed, because you can see that it has reached only the medium area between the bands of the oscillator predictor that corresponds to the trended oscillator 0 point. It means that market now stands in the point of equilibrium between the overbought and oversold condition, and that is also the minimum target of the stretch pattern, of the DiNapoli stretch pattern. So when market is trying to exit and leave the oversold condition, the minimum target is the point of equilibrium. So the point between the overbought and oversold. And in fact, market has limited upward move right by this area. That is also the previous area of the consolidation on the intraday charts as well. So this natural resistance, market has formed the highway pattern right here. So that is not very good for bullish perspective. This could lead to the turning to the downside and moving in the opposite direction if market will not be able to move above this area in the nearest trading sessions. What we see on the intraday charts. On the 4-hour time frame, we see that trend holds bullish. Market has formed some sort of the, if you could call it, head and shoulders pattern. Although the move that we have anticipated yesterday after the small retracement to the upside has happened, and it was really fast and significant, but market was not able to hold above the confluence resistance. So it has pierced it very deeply. You can see deep penetration of this resistance area. Market has moved above the weekly pivot point as well, but has failed to continue move inside of the previous consolidation, and that resistance area in general that stands between the weekly pivot point and confluence resistance on the 4-hour time frame has held the further upward move. Market has failed here and returns right back now below the weekly pivot point. Well, actually it's not over yet for the bulls, because the chances still exist that market could turn to the upside and continue move further. And from that perspective, we should monitor the one significant level for on the intraday charts, and this level stands around 134.16, 134.30 area. Why? Because you can see that market now stands very close to the 4-hour MACD predictor. So if market will form some sort of the stop grabber here, that could be another hope for the bulls that market will take in out of these highs and continue move further to the upside, and will be able to break through this significant resistance area. Why? Just keep in mind this number, it's 134.16, 134.30 area, and on the hourly time frame you will understand why this is important from another point of view. On the hourly time frame we see this sort of the development. That is our yesterday pattern that we have discussed as the reverse head and shoulders, some kind of this pattern. Market has broken through neckline and has reached the target already. It's 1618 extension between the head and right shoulder, A, B, C bottom. 1618 is right here. Now, if we will treat this acceleration only as the ABCD pattern, then very often market shows deep retracement, and the retracement right to the 618 support of the whole swing looks natural. That will be normal. So if market will reach this area that is also will be the retesting of the previous neckline. That is also this level stands around 134.30 area. 618 support from that whole swing from that low till that high is 134.17 area. But that is also the level of the MACD predictor on the 4-hour time frame. So if market with the nearest hours will reach this area of support and will form here the stop grabber on the 4-hour time frame, that will be the pattern that we could stick with, because it will give us a very tight possibility to place a relatively tight stop, and this will be a nice opportunity to take at minimum the scalp trade right above these highs. At maximum, this could put the foundation of the further move to the upside if market has really still has the power and intention to move higher. You can see how this previous consolidation has held the price action. You could see this was the support. Market has broken to the downside. Now it's resistance. Market has failed, particularly in this area. So that's why this is a bit nuanced analysis, a bit sophisticated, but this is really worth of it. So keep an eye on this level, because it could be really significant. If market will fail there and returns right back in the consolidation of the previous reverse head and shoulders pattern, that I suppose will shift the probability on the side of the bears. In this case, probably the downward continuation will be more probable. That the moment that bulls do not want to see. So that is our view on the current market. Keep an eye on this level, because in the nearest hours this could generate really very thrilling pattern that could appear right here. Again, if it will be the stop grabber right here, right at the 618 support on the hourly time frame from the whole swing to the upside, and that will be around the previous neckline. Market will form the stop grabber on the 4-hour time frame. This could be at minimum the pattern that could take it out of these highs, or even put the foundation, as I said, of the further continuation. So keep an eye on this level. If market will fail there, then do not enter long. Wait for the further clarification, because in this case this will be a bit, I could say, not very good development for the bulls, and could lead for the further downward move, because that will be not quite natural in terms of the development of the bullish trend.